It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. And with me in the KFG studios, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
If there was a word to describe what the markets and economy have been facing so far in 2025, it might be the word uncertainty. If that's the case, what are the most important decisions you need to make and get right in your personal finances this year? We're going to cover that and more on this episode of the Wise Money Show.
That's right. Uncertainty has been the theme for sure. We're going to break down three specific ways or areas of uncertainty and figure out how you can thrive. What decisions do you need to make right now to thrive in the face of uncertainty? What's the approach you need to take? If you have a question for the program, we'd love to hear from you. You can call or text us, 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can reach out to us, learn more about the show and the firm as well, or on social media. Wherever you're at, we are there as well. Just search The Wise Money Show and engage with us that way. So how do you thrive in uncertain times? And, you know, it's interesting. No one knows the future, and that's always been true. That will always be true. And so, in a way, it's always uncertain times, right? But I think right now, while, Josh, I would completely agree, the word is uncertain or uncertainty, it's also unsettling. And a lot of people, especially within their finances, are wondering, am I doing the right thing? What should I do? Are things about to change? And there's three pockets. Let me tell you where we're going. One is there's great uncertainty going on with the markets, financial markets, and tariffs, right? And so therefore, that's creating a lot of uncertainty in what I should do with my investments. We're gonna hit that. And then also, all of that is leading to economic uncertainty, and there's talk about recession. So what should I do right now if we could be facing that uncertainty of possible recession? And then at the time we're recording this, which is a few days before it airs, that's dangerous when we're talking current events. But we still don't know what the tax picture is going to look like next year. So how are you supposed to plan today for uncertainty in taxes? Any general thoughts, guys, before we dive in?
No, I just might add, though, that this is a theme that you have to be dealing with all the time when you're thinking about your personal finances. It's one of the issues that you're trying to solve when you're doing financial planning, because whether it's the world around you changing or you reaching a new stage in life, transitioning from the working years into retirement, or maybe someone you love and is close to you has passed away and your world has changed. Maybe it's a fun and exciting change, like a birth of a new child or sending a son or daughter off to college. When you are facing a major pivot or a major change in your financial life, or the world around you is just topsy-turvy, we always point to it's time to get focused again on your financial plan and take control of the things that you actually can take control of. And so that'll be a theme, I'm sure, throughout this day. But this is not unique. It doesn't have to be just a 2025 theme.
Yeah, to me, it's been very interesting because I'll talk to folks and they will talk about what's going on, tariffs, this, that, the other thing. And, I listened to this guy and he's really smart. And I'm like, oh, is he right? Like, he was right. But then he said this thing about Trump, either for or against Trump. And so now I'm done listening to him and I found another smart guy to follow. And I think, well, what does the smart guy have to do with these transitions in your life? Like you're talking about, Joshua. And it's, all right, is my nest getting emptier? Is my nest getting fuller? Or more full, and what's going on in my financial life, and what should I be financially focused on? Because if you look at what should I be financially focused on, it kind of insulates you from the noise and the chaos. It's kind of like coming in. The ocean, the sea is very rough, but you come in behind the breakwater, and it's pretty calm in the harbor.
I mean, but it's a concept that we were just talking about, not to get too philosophical here, but it's circle of concern and circle of control or influence. We're all concerned about a lot of things. That circle is super big, but within that circle is a much smaller circle, and that's only the things that we can control or influence. And so therefore, how much of that circle of concern are you getting distracted by or worked up about? And how can you divert more of your energy and your focus to that circle of control or circle of influence? Let's open it up. Tariffs and the markets. Tariffs and the markets. I was talking to someone recently. This is it's very interesting. Everyone has questions about tariffs and the markets and where are we going with growth and all of that concern. Everyone has those questions. However, they're all different versions of the same question as it relates to your investments and your finances. And that question is, am I going to be okay? Mm-hmm. So guys, let's open it up. Uncertainty around tariffs, uncertainty around the markets.
Yeah, well, I recently returned from our broker-dealers annual conference in Nashville. And I was talking with other financial advisors, and they were talking about their certainty about the uncertainty. And I said, well, what do you guys think is going on? They're like, oh, it's tariffs. I said, are you sure? Because the amazing thing to me, and I've seen this before, there's some uncertainty, but there's a veneer over that everyone's talking about. So everyone's talking about tariffs, but there's something causing things underneath to be roiled and stirred up. And so I always wonder, because I know after, I don't know, over the next 6 months or a year or 2 or 3 years, it'll be pretty clear what was causing the commotion in the markets right now. Really, if you look at it, it's been a great picture of, well, what happened if when the market dropped at the beginning of April, it had a meaningful drop. If I panicked and sold, what happened?
Yeah.
And so this is where you say, all right, well, you can't do that, right? You have to stay the course, and you have to be steady. And you knowing what is causing this may seem like, if I really knew what was causing this, it might give me some comfort. And I'm like, look, I don't think you can understand it. I mean, and what's been surprising to me is this administration has seemed fairly well organized, certainly compared to Trump 1. Trump 2 seems to have these folks, they're ready to go, signing the executive orders, doing all these things. But as far as the communication piece, the tariff thing still has left some people scratching their head.
Oh, my goodness, yeah.
And so I think, well, it does seem to me if the communication piece could be a little more crisp and clear, it might let people not be so panicky. I don't know.
I think you're putting it lightly. Yeah, it's been that would be an enormous improvement because here's the thing, like whether we find out in 6 months or a year exactly what was causing the commotion, if it was just tariffs or it was growth concerns or dollar reserve currency or inflation or whatever it is, it's really hard to make great decisions planning for the future when you find out there's tariffs for breakfast, no tariffs for lunch, double the tariffs for dinner. Like how does someone really make great decisions, let alone a business make great decisions in that environment? And so, yes, the communication has been terrible.
I've been having a conversation with one of my sons who's trying to get his mind wrapped around this world of investing and the economy and everything. And he asked me the other day about why it is a good idea or a bad idea to be a day trader. And tariffs are one of the examples that I pointed to, that you can't pretend that you know what is going to happen tomorrow, because there are policy decisions happening around the globe through various governments and everything that are beyond what we can even truly predict. And that is what is making this so confusing for people, because if all of a sudden tariffs are used now as a negotiating tool, as a lever, it is to get to a certain end, and we won't know for years how all that will play out and how America will benefit, how the whole world maybe can prosper through a reshuffling or a resituating of some of the control economically. So I think it's You're going to read articles all the time, though. Everyone has an opinion of this move is good or this move is bad, and you'll find both ends of the spectrum. It's too early to say, though.
But yeah, and here, enough banter. We're going to get to it. What then do you need to do? Right? All of that we've been talking about, sorry, we fed right into that circle of concern, and we're going to talk about the circle of control or the circle of influence. What do you need to do in the face of that uncertainty, whatever your opinion is, to thrive financially? We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is a weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern time every Saturday morning, and also on podcasts at the same time, also on a couple local radio stations at the same time as well, which is why the content structure the way that it is broken up, and yeah, it's long form and talk show, and yeah, if you're looking for something more direct, more simple, more palatable, we've got next Wise Step videos that air right here on this channel, 8 minutes, 10 minutes long approximately. They air every single work day, so make sure you hit that subscribe button, turn on notifications. And if you like the content, thank you very much. All right.
Okay.
So, Kevin, you used a couple of words there, and to make it tangible, I want to open it back up with what should you do with your investments and your investment strategy in the face of this market turmoil and uncertainty. I feel like we got a little bit close to some politics, which we don't want to do. And so let's you said stay the course, be steady. Of course, we've got to talk about, hey, diversification is actually working this year. And then even the continue to invest, because I think certainly for a few weeks there, people felt like, is it even safe to invest? I can't invest, right? When it really, it needs to be the opposite.
Right. And that's the reminder to automate your investment and your saving.
Yeah.
And if you're disturbed, start reading, but read the right stuff.
Yeah. All right. So I've got those three are action items. That might take a chunk of this segment, but yeah, let's divert to circle of control. In the face of uncertainty, seek wisdom. In the face of uncertainty, how do you thrive financially? What's within your control so that you can make decisions to thrive financially? We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. Where's that quote from, guys? In the face of uncertainty, seek wisdom. One of our favorite books.
Traveler's
Gift. Traveler's Gift.
Andy Andrews.
Yep. Fantastic book. Kevin was just saying at the break, if you're concerned, read something, make sure it's the right stuff. Read that book. Oh, it's fantastic. Make you better at life.
Well, and I'll tell you another great book. I really enjoy when young kids, and the definition of young kids has kind of changed over time, as I'm not such a young kid myself anymore. But a 24-year-old friend of our family was talking about, well, how do I get started? I'm trying to figure this out. And I said, read The Richest Man in Babylon. And so he was reading The Richest Man in Babylon. He's like, man, he sounds a lot like Dave Ramsey. And, save money and get your savings working for you. I'm like, yes.
Timeless principles in the face of uncertainty, or good times and bad times. So, okay, there's three pockets of uncertainty that we're going to address. We're hitting one right now, and that is in the face of uncertainty with tariffs, uncertainty with the markets. What do you do? And then next, uncertainty with the economy and recession. What do you do? And then uncertainty with taxes. So guys, we got a little, diverted and talking about the circle of concern. Let's talk about the circle of control. What can you do? What should you do to thrive within your investment strategies in the face of this market uncertainty and tariff turmoil and all that stuff?
I might go to an unorthodox answer here, but I feel like one of the most important things that you can do, an antidote to fear, is education. Informing yourself, understanding more of how the markets work and the economy and everything. So a lot of times when I talk to folks who are just nervous about investments in general, it's usually because they don't really understand what's happening and what's normal, really. And in fact, if this was a visual show on TV or something, I would point to a chart that I love to share with clients often. And it's a chart that looks back year after year over the course of the past 40 plus years. And it asks the question, in a typical year, how much does the stock market fall at one point or another? And it's important to see that in most years, there is a significant drop in the stock market. It's just normal. In fact, you would say you expect it to happen. And it is extreme when you stop and consider that in a normal year, on an average year, there's a 14% drop in the stock market at one point or another. And yet, the stock market on average finishes very positive by the end of the year when you look at total returns. And so if you came into every calendar year and said, you know what, I don't know what the cause is going to be. I don't know what the headlines will be when this is happening. But at one point or another during this year, I'm expecting that the stock market will be down double-digit returns.
So I'm going to translate that. Yes, get educated, but first thing you should do in the face of this uncertainty is be steady and consistent, because you said, Josh, that volatility is there most years. Like it's a feature of the market, as we've said in the past. So Kevin, you said stay the course, be steady, be consistent. I would absolutely agree with that. The second thing, I would be diversified. Does diversification work? Yes. Will you like it? No. Because when everything's going well, okay, then you're going to look at the green shoots that are growing the most and say, well, I should only be in those. And for a long time, that's just been U.S. stocks. Well, guess what? In the markets this year, everything is working. At the time we're recording, and again, that's a few days before it airs, everything's working except for U.S. stocks. This is a year where diversification is really showing its merits. This is why you're diversified. I have no idea what's coming up tomorrow. I have no idea what's going to happen in the markets next week and next month and the rest of this year. Thus far, at the time we're recording, everything's worked except for U.S. stocks. Stay diversified.
And everything's working except for U.S. stocks. But really, if you're saying, well, which U.S. stocks, it's the 7 that worked last year in 2024 that aren't working in 2025.
That's exactly
and
right.
This is where in 2024, to your point, Mike, people were looking and saying, oh, this is the only thing I want. So just the only thing I want is just an S&P 500 index fund. And all of a sudden, people are looking at their S&P 500 index fund, and it might be quite possibly the poorest performing thing that they have in their portfolio. And they're saying, wait a minute, what's going on here? And it's a little bit of a surprise. But when you start to peel back the onion a few layers, folks don't really know. So to Joshua's point of saying, hey, understand what's happening. And the Magnificent 7 got up to about 40% of the S&P 500, and now it's down to about 30%. And you say, yeah, that is kind of live by the sword, die by the sword. And so I would because if you said, well, what's working this year? Well, the top performing asset class is gold. You're like, well, how do I get exposure to that? Well, maybe it's not easy. Well, then go to the next one, Bitcoin. And like, wait a minute. Well, how do I get exposure to Bitcoin? And should I even be exposed to Bitcoin? And I say, well, if you look, because probably neither of those do you have a great opportunity to get exposure to in your retirement plans or typical things like that. And I say, all right, well, keep going down the line. All right.
International investments.
International, yes, I can definitely get exposure to those.
And isn't that interesting going back? And I know we stepped in the circle of concern quite a bit there, and like, well, tariffs this, tariffs that, and it's political, and it's strong opinions both sides, and we love you. And yet, international investments have done really well. Mm-hmm. If there's this tariff talk and concern, and yeah, the dollar's been depreciating, but so stay diversified. Stay the course, be steady, stay diversified. And then the other is certainly there have been a couple pockets already this year, probably we'll see it again later this year, where there was fear, Josh, going back to what you said. There was fear. Is it safe to invest? Should I invest? Or this is not a good time to invest. All of those phrases either came to mind or were verbally said. And so therefore, the third thing that we would suggest you do in the face of this uncertainty in the markets is continue to invest automatically. Because those times when emotionally you say, this is not a good time to invest, when you look back through history, those are the dollars that work the hardest for you. Those are the dollars. 2022, terrible time to invest. No, those were the best times to invest. 2008, nah, bad time to invest. No, that was the great time to invest. Right? When you flip the emotion on its and diffuse it, that's the time you want to be invest. So therefore, well, do you only invest during bad times? No. You automate all your savings. Automate your savings.
You know, these dips that can occur, sometimes they come and go so rapidly that there's no highway markers or signs to tell you, hey, now's the time to get in. You know, this is your exit to, really start dumping money into the market because we're at a low point or anything. And that was certainly true this year. You know, it started out strong, it fell sharply, and it rebounded sharply. And the only way that you're taking advantage of that along the way is through automated contributions. And that is one of the hallmarks of your retirement plan at work. Right? It's one of the reasons why we say that 401k is such an amazing wealth building tool, because you turn the contributions on and then you forget about them. You go to work budgeting and living off of the net amount of income that lands in your bank account, and what's being peeled off the top and is being contributed on a regular basis is taking advantage of the volatility that's probably going to continue. When we're in uncertain times, volatility is what we experience. Yeah. So there will be more ups and more downs, which means you want buying happening regularly.
And to really stretch your thinking, why do you invest in stocks? Why do you invest in equities? It's for the volatility. It is. And you might say, well, no, that's not true. Well, wait a second. Then you'd only put money in savings. There's no volatility there. No, you invest in stocks for the volatility, and you say, well, I know I want the upside volatility. The only way to get that upside volatility is to be exposed to the downside volatility. Otherwise, there wouldn't be volatility. It would just be stable, and if it's just stable, you're not going to get those handsome rewards that you get over the long term. So stay the course. Be steady. Be consistent. Stay diversified, even at the times you don't like it, and then keep saving. Automate your savings. Be consistent with saving as well. All right. How else do you thrive financially in the face of uncertainty? We've got that more coming up on the Wise Money Show with Korhorn Financial Group.
You know, you said a couple times in there, stay diversified, but there's a lot of people that have drifted to not diversified at all, and so maybe it's a return to diversification or whatever. But
yeah, and I was talking to someone, and they're like, okay, so should I stock up on toilet paper? I'm like, no, don't stock up on the things that we make here in the U.S. If you're going to stock up on anything, look at stuff the price might be increasing. I mean, because if you look at the increase in international stocks, it seems like there are two things. Number one is dollars are flowing to those countries to invest, but also the dollar is down.
Yeah, and that that's where I almost didn't. I don't want it to get super into tariffs and political, because there's amazing people with very strong views on both sides and super smart and so. But a lot of smart people that I've listened to have said that's the angle. Some of the tariff threats and talks are trying to make the dollar more competitive globally. That is part of the strategy. Because it's too strong.
Some of my favorite people to listen to are just mad about the tariffs.
Oh, yeah.
And you would not peg them as people you would peg them as, center right type folks that would be, in theory, kind of going with the company line. They are not at all.
Josh, are you in Guide to the Markets? So go to the consumer sentiment or consumer confidence. I think they call it consumer confidence, but it's really the sentiment one. But so now this segment 3, talk about uncertainty in the economy and recessions, and this is where we can blow it up to say, no, comprehensive financial planning. That's how you plan for an uncertain future. But if we want to talk about anything related to that, that is like consumer sentiment is wildly contrarian.
Right.
And we are currently hitting low, like troughs. Now, I don't know if it's going to keep going lower, but we are at levels that were previous troughs.
Right.
And that's extremely positive. So,
I like it.
Anyway, I've done a couple of videos on that.
Extremely positive a year from now.
Right, over the next year.
Yep.
So, all right, so this recession talk, GDP, and just the antidote is financial planning. Here we go, third segment. It's been a lot of talk about a possible recession and an economic slowdown, of course, negative GDP in the first quarter. If we are headed into a recession, what do you need to be doing right now to thrive during that time, to be prepared, but also thrive? We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on the YouTube channel. Go check it out. Each show, but then also a lot of other content all throughout the work week. We are airing content to help you take your next wise step in your financial life from a comprehensive financial planning perspective. So go to YouTube, search the Wise Money Show, subscribe to it there. Turn on notifications here, no matter where, every time we drop new content. Share the content there. Leave comments and questions. We appreciate it. So talking about uncertainty and how you face uncertainty, and not only that we're seeing this time, but how do you thrive during it? We talked about uncertainty in the markets caused by tariffs. Tariffs are also causing a lot of other uncertainty, but that's economic. And the stock market and the economy are linked, but they are separate. And there's more talk about recessions. There's been several big talking heads that have said, oh, recession's on later this year, expect it. We even had negative GDP. Guys, how do people thrive or make great decisions in the face of a potential recession and economic slowdown?
Well, I think from a personal finance perspective, you do need to take inventory of just where you are financially. Ask yourself, how healthy is my own balance sheet? Am I in a spot where if there was a hiccup or some sort of a reduction, an interruption to my income, are we okay? Do we have an emergency fund to be able to fall back on, that sort of thing? And when you have your daily bread and your rent, and you know the kids are still going to have clothing at the start of the school year next year, all of those types of things, when those are handled and you're not worried about them, it allows you to take a more long-term perspective with things like your investments for retirement or investments that you're growing for kids' college education, that sort of thing. You can handle more of the ups and the downs because you know that tomorrow is taken care of, at least. But you have to know that it's taken care of. And it may be a time for you if you're feeling uncertain or there's question marks about your own job. And that's what we often think most about when we're talking recession, right? Am I going to keep my job? We're talking also about the market fluctuations, and that's, will my stock portfolio, my investment portfolio be climbing this year, or will it be in a dip? And both of these are a concern, but take care of the family first. Make sure that you know that you're in a good spot, the budget's under control, and you've got some cash reserves to be able to fall back on so that you can think long term.
And for those cash reserves, this would be a good time because things have changed with rates to confirm you've got a good high-yield savings account that your longer-term cash is sitting in and not just sitting in the bank earning 0.0 nothing. And so the other thing, Josh, when you talk about the budget, and if you're listening and you say, the very fact that you're listening to the show, I'm assuming you've got a budget. But if you don't, this would be a great time to either start or restart the budgeting process. And if you say, hey, I'm already there, well, consider someone who might have had to just restart their student loan payments and talk to them and say, hey, how you coming? Do you have a budget? Does it work for you? Is it because I know in that younger generation, there's a lot of angst right now about, hey, I am paying this really expensive rent for a dinky apartment, and I'm restarting my loan payments and my car payment, and it seems kind of untenable. And I think what you can do is you can encourage that generation to focus on their circle of control and say, all right, what's the necessary sacrifice to take to get out of this and to a better level of financial problem?
Mm-hmm. I like it. You know, if there was another maybe warning or pep talk to give to every investor out there, it would be one to just protect against your own emotions. And you know what headlines and what sources of articles or videos or whatever stir you up, get you fired up, and maybe make you fearful. You might feel it in your body when that's happening. And I got to tell you, there's enough data and history out there. Mike and I were talking at the break about a study that has been ongoing for decades. And it's essentially a survey that measures consumer sentiment. And it started out back in the day when phone calls were made and just asking Americans, how you feeling about your financial life right now? How you feeling about the economy and the outlook and everything? And then they would just plot the scores over time. And what has been found is that throughout history, when sentiment gets down to really low levels because we're all feeling just really crummy about the outlook, it is usually the sign that within the next year, the stock market is going to really do well. And it's because often what we are measuring is how things are feeling right now. We're just really measuring the current reality, which is no indication necessarily of where things could be even just 1 year from now.
Yeah, we just project that that's just going to continue, and it's almost unbelievable to if you don't see the chart, which we've done a few videos on YouTube about it as well, that yeah, when you feel the worst and you project that, well, that worst is going to continue to get even more worser, then that's typically the time that things reverse course. Okay,
so much so. Can we quantify that real quick?
Yeah.
Because on average, when you look back at the 9 points over the past, say, 45, 50 years, where consumers felt the worst, within a year, on average, the market's up 24%.
Unbelievable.
That is crazy. And here's what you need to know. Here, coming out of April, May timeframe, consumer sentiment is down at nearly historic lows. It's only been this low or lower a couple other times in history. And so if you needed a little bit of, it's almost reverse psychology. The worse I feel right now, the more excited I should be about where things might be even a year from now.
Yeah. All right. In the face of an uncertain economic future, potential recession, there's 6 areas to your financial life. And in that uncertainty, I would make sure that you're taking inventory of where you stand in each of those 6. Josh is absolutely right. We started talking about the budget and having cash reserves and emergency fund. That's all present financial position. Yes, it's time to take inventory of that. And I'm telling you, if you had a budget but you haven't been staying on top of it, it might be because you're just frustrated with outlooks. Everything costs more. Things are tighter than they should be. And you know what? And you're making more money and you want to splurge. And you might just not want to face that reality. And I'd encourage you, if you knew a recession was coming or a slowdown was coming, you would benefit from taking that hard look right now and just saying, okay, where do we stand? The second area is protection planning. And not that we're going to go this slowly all the way around the circle, but if we're facing a recession and there's job uncertainty, you want to have inventory right now of where you're getting your protection. Where are you getting your health insurance? Where are you getting your disability insurance? Where are you getting your life insurance, to say just those 3? Those are 3 of the 5. If you're getting your life insurance through work and it's possible you lose your job in a recession, I wonder about exploring, well, is it better for you to get your life insurance outside of work right now? That's typically, we haven't done a show about that specific thing recently, but it's typically better for you to get your life insurance outside of work. It's typically convenient to get it in. Of course, it depends on your health and your own situation, but I would take inventory. Where are you getting your benefits so that if something changes with your job and all of a sudden your income goes away and your insurance protection goes away, all right, what pieces do you need to pick back up and where do you get those?
I love it. Yeah, nothing more to say about that.
That's connected to your tax picture. There's uncertainty there. We're going to pick that back up in the next segment. But thinking through, well, in this uncertain time with the markets and recession, your tax picture, are there opportunities? Is there a way to take advantage of this volatility to turn some, let's just say, lemons into lemonade? Okay.
Well, this is a year where you might look, and for the first time in a couple of years, you might have some losses, and you say, all right, do I harvest those losses and use those to free up some gains, or and the gains that you have, those highly appreciated stocks, that might be what you might want to slide into your donor advised fund.
Yeah, that's right. We're going to talk more about taxes because that's the third area of great uncertainty that we're seeing. And so how do you plan ahead right now when we don't know officially what tax rates are going to look like next year? And so how do you make great decisions and thrive during that? So we've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Okay. Little teaser into the next segment. I think we also, before we go headlong, it's fourth segment, before we go headlong into the potential tax changes, the tax uncertainty, thinking about the 6 areas of financial planning, I think we should also touch on uncertainty with your retirement plan, your retirement picture, your ability to save up for retirement or be on track for retirement, and the benefit of tuning into that plan right now, but tuning into the Monte Carlo analysis, we don't need to say that, but the stress testing. Because if we do face a recession, if we haven't seen the worst of the markets, you want to know where you stand with your goal, and you want that goal to be stress tested so that you have more confidence and conviction. If we touch on that, and then we talk about the benefits of financial planning, and then we go into the tax picture, I think that would be the route that I would take.
Okay.
Sound?
Yeah, I mean,
make sense?
Wait, so are we going to? So do we deal anything with taxes and the big beautiful bill that's not been done yet, or do we? Because the other thing is, if you talk about it, when we get to investments, and this, I know this is a 4th segment, but when we get to investments, if you're going to retire this year, are you aware of the sequence of return risk, and do you have?
No. So
is this really the 4th segment?
It's the 4th segment.
I know.
No, we're going to start with retirement.
Okay.
And then we'll get into taxes. Okay. And so I do this sequence of return, any comments you have there, when we're talking about retirement.
Mm-hmm.
Okay. All right, 4th segment. Here we go. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on podcast. Wherever you listen, just search the Wise Money Show. Subscribe to it there. Rate the program there as well. We appreciate it. We're talking about how you thrive in the face of uncertainty. Financial planning, comprehensive financial planning, looking at all 6 areas of your financial life. That is how you get prepared for every situation and how you have confidence in the face of an uncertain future. We've talked about, well, in the face of, tariffs and market turmoil, how do you manage that, the uncertainty in your investments? And we're wrapping up, about to turn into taxes, but wrapping up it's possible we see a recession. So economic uncertainty, what do you do? So with your retirement plan, typically that's going to be your biggest financial goal. May look different for you. It may not be your biggest financial goal, but for many people it is. Right now, if we are potentially, if we're into uncertain waters with the economy, potentially heading into a recession, I would want you to tune in to your retirement plan, that 5-factor retirement plan right now, so that you know where it stands, that you go through each of the variables, each of the key decisions that you that you can make, that you're making about your retirement picture, and then stress test it. Do that now so that if we see more turbulence, if the market does go down a lot and much further, we see a severe recession, that you have that confidence and conviction about your retirement picture, this goal, and where you stand.
When you guys say this is one of the best tools that we have in our toolbox for being able to help people calm themselves during times where the markets are volatile.
Oh, absolutely.
Because when you zoom out from just the noise of the stock market being up and down and everything, and you zoom back into your own financial outlook and your own picture, to be able to show someone, hey, you're actually still on track for your goal. In fact, you still have a very high probability of success because we're already anticipating that there's going to be volatility between here and your retirement goal. And guess what? There's going to be volatility after you reach retirement and you're living out the rest of your days, decades in retirement as well. And so, we have tools at our disposal here to be able to actually quantify probabilities of success. And it's done by stress testing that retirement plan.
Yeah, I like looking at the probability of success for my retirement plan. I like being aware for sure of this idea of called the sequence of return risk. And do I need to worry about the sequence of return risk? Because I've noticed in my feed a lot of articles popping up and talking about that. And you really don't you can deal with that concern by making sure that you've got your short-term money, your short-term needs in short-term investments. Mm-hmm. And the longer-term money, going back to the very first segment of this show, you want to be rebalancing. Make sure that you're rebalancing into the right allocation. But if you have your short-term, basically income supplement handled, and you've got your long-term dollars structured to do the long-term lifting, you should be able to weather the storm fairly well.
But you want to go through that 5-factor retirement plan, okay? And then you want to stress test it. You want to do that stressing of your assumptions, and that includes that sequence of return risk. And then you want to work with your advisor, your CFP, to make sure that your investment strategies are structured just the way Kevin mentioned, so that you don't have that worry and that concern, even if things get much worse, before they get better. Okay, so that's economic uncertainty and being recession ready. You don't want to be constantly worried and fearful of a recession, but you do need to be constantly prepared for a recession. Mm-hmm. Those are two very different things. How are you consistently prepared for a recession? Working through all 6 areas of your financial life with a certified financial planner who's doing comprehensive financial planning. Okay, pessimistic short term, optimistic long term. Therefore, always your financial life always decisionable. You're always prepared for a recession. All right, the last area of uncertainty that we're all dealing with, it's probably not top of mind. And by the time this airs, who knows? There could be a little bit of momentum going with this. But that's with taxes. Mm-hmm. We still don't know what tax rates are going to be next year. We actually don't even know. Kevin, you were talking about, well, there's some organization going on, or is there? There hasn't been a lot of confidence being shared about here's how we're going to tackle the taxes. Is it 2 bills? Is it one big beautiful bill? Like what is it? And it's creating a lot of uncertainty about, well, what should I do today about taxes in the future? So how do you thrive? How do you take steps with your tax planning in the face of an uncertain tax picture?
I would just encourage you to not play the game of trying to be a predictor of where the political winds are going to take the tax code over time. Yeah. Instead, play a different game. And this is a game that you need to play every single year, and you need to be masterful at it. And that is your own tax planning, your own tax projection work. If this is not part of your normal routine and part of the conversations that you have with your certified financial planner, then now is the time to get in the game. And it's to begin to predict, do you know where you're going to land on your tax return this year? There's no question on what laws are going to exist this year.
Yeah.
Those are in the bag. We're playing the game with a set of rules. And do you know where your income's going to fall? And more importantly, what you can do to influence that up or down? And which direction should you be going with your income? Do you even think of your income as a number that you can move and change, especially with maneuvers like doing Roth conversions or contributing more to your retirement account, that sort of thing? if you're a business owner, how do you decide when to take certain deductions, like write-offs on a machine that you bought or something? All of these are decisions that you're going to make for this one calendar year. And yes, you're wanting to do that with wisdom and perspective on the future. Like, is it better to pay the taxes now or wait in the future? All I know is we know what the rates are today, and they are historically considered very low. And so if paying some taxes now helps you avoid even some higher taxes 20 years from now, I would play that card for sure.
Yeah, but for sure, Josh, to your point, especially if you're a business owner, looking at what should I do with depreciation if I'm buying something or if I'm building a factory, there are a few things to consider. Do I realize the savings this year, or do I realize it in future years? And it depends on a lot of assumptions that you need to build in. But that's very, very powerful to have a plan that tells you, hey, this is exactly what I'm going to do. And then I would wait till as long as possible to execute on that plan. So have your plan, keep it in your back pocket, and say, all right, when the time comes, I'm going to execute, and assuming we'll know more when the time comes.
There's a couple of things that I would tell you, even with tax uncertainty, to do. Okay, 2 things, 2 times 2. Okay, the first 2 is in the face of this financial and market volatility. Take a look. Are there some tax losses that you can harvest, like Kevin already mentioned, so that you can either get that deduction on your return or offset capital gains? That's the first one. And then the second is, should you consider a Roth conversion? Markets are down. Markets have been volatile. And if markets are on an upswing and you say, I don't think I want to do it now. Well, if we see another downswing, are you prepared to jump on the opportunity at that point to do a Roth conversion? That's the first 2. The other 2, no matter what happens with taxes next year, we've got 2 new laws for taxes that I'd want you to rule in or rule out with your financial planner. One is the super catch-up contribution. If you're 60, 61, 62, or 63, this year you have the ability to contribute even more to your 401k. Is that something you should be doing? That's one. And then the second new tax rule is the 529 to Roth IRA transfer. Is that something that you should be doing? Is that something that, you haven't been funding your 529 plan? Maybe should you? Is that maybe you should change how much you're contributing, change your investment approach? You need to rule those or rule them out no matter what happens with tax rates next year. So 2 by 2 there, work that plan, that proactive plan with your certified financial planner. The whole theme for the show this year has been very uncertain. It's been unsettling. There's a lot going on in the circle of concern. Let's focus on the circle of control. What do you have influence over? Work with your certified financial planner. Look at all 6 areas of your financial life and make key decisions to thrive during this uncertain time. All right, that's all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, all of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.